Hello, welcome to Financial Markets Weekly, an audio podcast by Succinct Information. This is a professional summary, free of noise, focused on facts, and straight to the point. We help you save time while covering the key events and market performance. These are the highlights from last week.
This past week witnessed a flurry of central bank actions and statements, contributing significantly to the direction of global markets. Risk markets experienced considerable turbulence across various asset classes, largely due to the active stance adopted by 6 central banks in advanced economies, including the Fed. While most of them maintained policy rates steady, the prevailing hawkish sentiment reverberated through regions, prompting a widespread sell-off in markets. Leading equity indexes fell between 3 and 4%, with significant declines for growth stocks. The primary catalyst for this turmoil was the Fed's hawkish outlook. Even though it opted to keep interest rates unchanged, at a 5.25% to 5.5% range, the Fed projected prolonged high and restrictive rates to combat inflation effectively. It signaled one more hike of 25 basis points before year-end, and forecasts a Fed funds rate of 5.1% by the end of 2025. The central bank sees inflation dropping to its 2% target in 2026, much later than markets expected. Let's hear what Chairman Jerome Powell said during the press conference regarding this week's decision and the near future.
Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, we are in a position to proceed carefully in determining the extent of additional policy firming that may be appropriate. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective.
Continuing with monetary policy, let's briefly cover the rest of the action. The Bank of England delivered a surprise by maintaining its base rate at 5.25%, contrary to market expectations for another hike, at the first meeting where the bank refrained from rate increases since late 2021. The inflation reading for August reflected a significant drop in core CPI to 6.2% and a modest decrease in headline CPI to 6.7%. The British pound fell 1.2% to $1.2238, helping the dollar's appreciation, with the DXY index reaching a 10-month high. As expected, the Bank of Japan kept its ultra-low interest rate at -0.1%. It maintained a dovish guidance, signaling no immediate plans to withdraw its substantial monetary stimulus. The Swiss National Bank also surprised analysts by leaving rates unchanged at 1.75%, the first time since March 2022. However, the SNB did not rule out the need for further tightening. Finally, in developed markets, both Sweden and Norway's central banks increased their benchmark rates by 25 basis points, to 4% and 4.25% respectively, and both signaled a similar hike at their next meetings. Unsurprisingly, these updates pushed bond prices lower and yields higher. US Treasury yields surged to a 16-year pinnacle. The short end of the yield curve, more sensitive to central bank policies, experienced a slight increase. The 3-month US bill ended at 5.48%, while the 2-year note closed at 5.12%. The 10-year bond reached 4.44%, the highest since 2007. In European markets, bonds added a few basis points to 2.74%, but British gilt yields fell to 4.25%. Moving back to equities, the S&P 500, down 3%, and the Nasdaq Composite, down 3.6%, had their worst week of the last 6 months, and are currently trading at levels not seen in the past 3 months. The impact was felt more strongly in growth stocks than in value stocks, resulting in a sharp decline in several mega-cap companies. Tesla fell 11% on the week, Amazon lost 8%, while Alphabet and Nvidia gave up 5%. The worst sector was by far consumer discretionary, which includes Tesla and Amazon, with a 6% drop. Despite the weakness in stock valuations, one large technology acquisition and two large IPOs were priced during the week. Cisco Systems agreed to acquire cybersecurity firm Splunk for $28 billion in cash. This is Cisco's largest acquisition ever, and the biggest tech transaction of the year. Instacart, the US grocery delivery group, formerly called Maple Bear, raised $660 million by selling 8% of its outstanding shares on Nasdaq at $30. Shares initially rallied 40%, but reversed to its IPO price towards the end of the week, for a market value of $8.3 billion. Also, the intelligent marketing solutions company Klaviyo raised $576 million on the NYSE, and was also priced at $30. It closed 10% higher for a market cap of $8.4 billion. In commodity markets, crude oil fell slightly, following several weeks of gains to this year's record. Brent closed at $93.30 and WTI at $90. The main news was Russia's decision to implement an exporting ban of gasoline and diesel with no end date. Russia is following Saudi Arabia in reducing voluntary oil production cuts, but higher prices are hurting local consumers, and this measure helps Moscow in both fronts. To finish today's episode, cryptocurrency markets unfolded with no major headlines impacting the sector. Bitcoin is unchanged in the past 7 days at $26,560, and Ethereum is marginally lower at $1,592. The notable mover in an otherwise stable market was Chainlink, which gained 16%, as it continues to successfully implement its Web3 protocols. That's all for this week. Please subscribe to the channel and help us promote it. Visit succinct.info to learn more about our subscription service. Have a good week.